Hello and welcome back to Explain the Charts. Today is October 21st, 2025, and we're doing an in-depth analysis of one of the market's biggest players, Microsoft, ticker symbol Microsoft. We'll be breaking down the latest news cycle and then diving deep into the charts to see what the technicals are telling us. As we can see on this daily chart, Microsoft has had a powerful year, but has been trading in a more consolidated range recently. The prevailing narrative in the news is overwhelmingly positive, centered on Microsoft's massive push into artificial intelligence. Sources like Benzinga and the Motley Fool highlight that strong demand for AI, cloud, and security services are the key catalysts right now. A major event on the horizon is the company's earnings report, scheduled for October 29th. Wall Street will be laser-focused on the growth numbers for the Azure cloud platform and updates on the adoption of the Copilot AI assistant. Azure's revenue growth was a staggering 39% year-over-year last quarter, and investors will want to see that momentum continue. Copilot is also seen as a massive future revenue stream, with the potential to add billions in recurring revenue. However, some analysts are raising questions about valuation. Yahoo Finance notes that with a P/E ratio around 38, the stock is trading at a premium compared to its historical average and the broader Nasdaq 100 index. This suggests that while the long-term outlook is bright, the stock may be priced for perfection in the short term. Interestingly, recent news from CoinCentral mentioned that Microsoft's partner, OpenAI, plans to reduce its revenue share with Microsoft. Despite this, the stock remained resilient, which shows Wall Street's confidence in Microsoft's broader, integrated AI ecosystem over just a single partnership. The consensus is that the benefits of embedding AI across all its products far outweigh any changes to one specific deal. There are minor headwinds, like some Windows 11 bugs mentioned by MarketBeat, but these are seen as short-term operational issues. Overall, the fundamental picture is strongly bullish, driven by AI and cloud dominance, but tempered by high valuation ahead of a pivotal earnings report. Now let's connect this news to the price action here on the daily chart. If we zoom in on the period from April to late July of this year, you can see the explosive rally that reflects this AI-fueled optimism. The stock bottomed out near the 52-week low of $344 back in early April, and then began a monumental climb. This rally culminated in a massive gap up on July 31st, where the stock hit its 52-week and all-time high of $555.45. This was likely in response to the last earnings report, which confirmed the incredible Azure growth we talked about. However, look what happened immediately after hitting that peak. We saw a significant reversal, with the price closing much lower at $533, forming a bearish-looking candle. This tells us that despite the good news, there was major profit-taking at those levels, establishing $555 as a formidable resistance level. Following that peak, the price entered a necessary correction and consolidation phase. The stock pulled back throughout August, finding initial support just above the $520 mark. A key support level to watch was formed during the lows of August and September, right around the $500 to $495 area. The $500 level is also a significant psychological support zone. For the last 2 months, Microsoft has been trading within a well-defined range. The upper boundary, or resistance, is around $530 to $535. The lower boundary, or support, is that $500 level we just identified. The price is currently trading around $516, right in the middle of this consolidation range. This coiling price action is very typical before a major catalyst like an earnings report. The market is essentially waiting for new information to decide on the next directional move. A sustained break above 535 would be very bullish, signaling a potential continuation of the primary uptrend. Conversely, a decisive break below 500 would be a bearish signal, suggesting a deeper correction could be underway. The volume has been relatively average during this consolidation, which is also typical. We would expect to see a huge spike in volume on a breakout or breakdown from this range. Long term, the trend is clearly up, but short term, we are in a period of indecision. Let's look at the lower time frames to get a better feel for the immediate price action. We will switch to the hourly chart now. This can give us clues on the intraweek sentiment. The daily chart clearly shows the macro picture, a strong uptrend followed by consolidation. Looking at the 1-hour chart, which shows us the price action from the last couple of weeks, we can see this range-bound activity in more detail. The price has been making a series of lower highs and higher lows, creating a tightening pattern. In early October, we saw a push up to the $530 area, which was quickly rejected, reinforcing that level as strong short-term resistance. The subsequent sell-off found a floor around $510, which has acted as a key short-term support level over the last week. We can see multiple tests of this $510 level. Each time the price has bounced off it, indicating buying interest is present there. The most recent price action shows a struggle around the $515 mark. It's currently acting as a pivot point for intraday traders. A move above 518 could see a quick test of 520, which has been a resistance point on this hourly chart. On the other hand, failure to hold 513 could lead to another test of that crucial $510 support. The price is really getting squeezed between these short-term levels. This compression often resolves in a volatile move. Let's drill down even further to the 15-minute chart for the most immediate picture. We'll examine the action from the last couple of trading sessions. It's here we can see the microtrends forming. This helps us see the order flow in real time. On the 15-minute chart, we can observe yesterday's trading session very clearly. The day was characterized by choppy, sideways price action, perfectly illustrating the market's indecision. Early in the session, the price attempted to break above 518 but failed. It then sold off to find support near 513.50 before recovering into the close. These levels, 518 as resistance and 513.50 as support, are the key battlegrounds for today's session. Traders will be watching to see if buyers can push through 518 or if sellers will take control and break 513. The low volume on this timeframe confirms that large players are likely waiting on the sidelines ahead of earnings. This micro-level consolidation reinforces the bigger picture we saw on the daily and hourly charts. Let's switch back to the daily chart to put it all together and discuss our outlook. So, to recap, the fundamental story for Microsoft is exceptionally strong due to its leadership in AI and cloud computing. However, the stock's high valuation makes it vulnerable to any disappointment in its upcoming earnings report on October 29th. From a technical standpoint, the long-term trend is bullish, but the stock is currently in a sideways consolidation pattern. Let's outline the key price levels to watch once more. Major resistance is at the all-time high of $555.45. Before that, the price needs to clear the recent range resistance between $530 and $535. On the downside, critical support lies at the $500 psychological level, which marks the bottom of the current range. Below that, the next significant support is around the September low of $490. Now for our potential scenarios. Our primary bullish scenario, which we see as having about a 70% probability, is contingent on a strong earnings report. If Microsoft delivers another stellar quarter with strong guidance, especially on Azure and Copilot, we expect a breakout above 535. This would open the door for a move back towards the all-time highs. The bullish case would be further reinforced by a significant increase in trading volume on the breakout. Our bearish scenario, with a 30% probability, would be triggered by an earnings miss or weak forward guidance. In this case, we would expect a break below the $500 support level. A break of 500 could lead to a swift move down to test the 490 support area. The most likely path for the next 7 trading days leading up to the report is continued consolidation within the $500 to $530 range. The key thing to watch for is the earnings report on October 29th. That event will almost certainly be the catalyst that breaks the stock out of its current indecision. Pay close attention to the management commentary on AI monetization and cloud demand. We hope this analysis has been helpful in preparing your own trading plan. Please remember, this video is for informational purposes only and is not financial advice. Investing in the stock market involves risk, and you should always conduct your own research and due diligence before making any investment decisions. If you enjoyed this breakdown, please give the video a like, subscribe to Explain the Charts, and hit the notification bell so you don't miss our next update. Thanks for watching, and we'll see you in the next video.